We have to talk about what's happening for Bitcoin right now as we go into a new week. Bitcoin has broken $91,000, but there are some things unwinding that you need to be aware of. Taking a look at Bitcoin's price action here, 91,100. We have come down to reach this low of about 80,000, and all eyes on Bitcoin, whether or not it can finally break around the $93,000 region. Now, ideally, we want to get back above $100,000. This is a psychological line in the sand that, of course, the market is going to be looking closely at. You got to remember that if we can break $100,000, that's when mainstream media will start talking about Bitcoin again, and everyone who dumped their Bitcoin at like about $100,000 or dumped their Bitcoin at $80,000 because they thought it was going to go significantly lower, they'll come piling back in, and that fuels the next leg if the next leg comes, because that's how it always happens, right? Everyone loses interest right now. No one cares about Bitcoin. No one cares about altcoins. No one cares about crypto. When the price is down, they only care when the price is up. And we can always use this data here, the Google Trends, to basically confirm that thesis. So if you search altcoins, if you search whatever, they're always going to coincide with the price being significantly higher, because that's when the retail buzz comes back, and that's when we use it as an opportunity to take profits. That's why the brutally honest truth about this market is you need to have the guts, the gumption, the balls, whatever you want to call it, right? To be in the market when the majority are scared. The majority lose money in crypto. So the only way to do the opposite of them, which is win, right, is to be positioned when everyone thinks we're dead in the water. And that's it, guys. And this isn't a guaranteed game. That's the truth. Anyone who's telling you that this is a guaranteed game is full of it. That's nonsense, right? We don't know what's going to happen. We don't know if we're going to go on to the next leg here, or we're going to go down to $40,000 per Bitcoin, which would coincide with the average drawdown for the bear market. But again, the brutally honest truth is the people who have made all of the money in Bitcoin, all of the money in the altcoins, all of the money in the S&P 500 or gold or any of these assets that actually deliver these returns, they have sustained these moments of fear. And the cleverest people in the room during the tariff crash, right, said the S&P 500 was going to go significantly lower. But guess what? It didn't. It found a bottom at about a 20-ish percent drawdown, 21%, and then it rallied. This pullback right here recently, right? Everyone was saying, okay, well, this is it. Michael Burry is finally right. And guess what? It wasn't over. We bounced again, and we're now close to all-time highs. So remember, when these pullbacks happen, nobody knows for sure what will happen. And the people who can sustain themselves in assets that actually, according to history, just go up and to the right are the ones that make the most amount of money. Just look, in the time that I've been making videos, right, was just before the old Ronaronason crash, and the S&P 500 dropped that day, or those couple of days, 35%. It then recovered. But nobody knew for sure. We had never in the world, right? We had never in the world dealt with what we dealt with back in 2020, 2019, 2020. We had no idea. And yet the people who panic sold missed out on the biggest run in history that came after the most catastrophic event in recent history for the markets. They missed out on a 200% move. And in this time, there were people saying, it's different, it's over, yada, yada, yada. Same again for the 2022 bear market here for stocks, and same again for the tariff bear market, quote unquote, because it was so short-lived. Same again, right? So my point here is the honest, brutal truth is nobody knows what's going to happen, but positioning ourselves, right, in times like this, or positioning myself, let me say, in times like this, has always in the history of Bitcoin been the right thing to do. Now, is this time going to be different? Well, I don't know, but I'm willing to take that risk with the money that I'm putting in this market, because every time in history, whether this moment in time that we're in is in fact here where I was buying at 40K, or it was in fact here before the next leg up, it doesn't matter, because one of these results in the next leg up being very soon, and the other one of them results in a 2-year period where I could buy Bitcoin Bitcoin, altcoins, and everything to set myself up for complete financial freedom, which is what I've done. But I only got here because I was buying when everyone else was panicked and fearful, right? Right now, I am still in some of my trades. Not many of them, but some of them. As you know, I've taken my foot off the gas as we are below 100K. We're below my line in the sand. We're below the 50-week, the 200-day. We're below all these regions, so therefore I'm foot off the gas, right? But that doesn't mean I'm missing out on the opportunity. In fact, I still think there is huge opportunity in this market to position myself. That's why I have this trade. Now, the Dogecoin trade, right? I now have 550,000. It's about $76,000 of Dogecoin I have access to, right? I got 1,200 over here and $10,000 now realized. So the key to this trade, I'm getting in when people are scared. When we get a quick push to the upside, I'm taking profits at previous resistance zones. I'm waiting patiently. As we came down, but we didn't break the low, I actually re-added. I then repeated the process, taking profits at resistance zone. I've now waited. I didn't get a chance to get in because we've bounced, but if we go a little bit lower, I may add to this position if we continue this higher low structure. But the plan is to make sure I keep my stop losses in place so I protect my capital, because right now, right, I think there's less likelihood as there was before for these big rallies to come out of nowhere. In fact, the opposite is true, but I still want access to that upside. Now, the worrying thing that we have going on right now is, of course, the Japan 20-year bond yield climbing significantly. So this bond yield rising is triggering the yen carry trade unwind. Investors who borrow cheap yen to buy Bitcoin are now selling Bitcoin to cover higher costs and stronger yen. Now, that's much more simplified than what's actually happening, because they're not just doing it with Bitcoin, they're doing it with loads of things. But this could be one of the reasons why Bitcoin is seeing the downward pressure. Downward pressure on Bitcoin's price 10 to 20%, especially with the thin holiday liquidity, which is coming up, right? That's the short-term outlook. The long-term outlook is once the forced selling ends, it clears weak hands, it removes FUD from the market, and it sets up for a healthier rebound, okay? So this might not be long-term bad, but in the short term, it could be, because Japan will be forced to sell US bonds. The rest of the world will follow. And this could unlock a little bit of FUD here that I haven't seen many talking about. Tether could suffer a sharp depeg as Bitcoin will sink as a result. So Tether, because of the US bonds, Bitcoin sinking, and then MicroStrategy being potentially forced to sell, which will further depress the Bitcoin price. So this could be a big piece of FUD that we have coming. So to further reiterate the brutally honest truth about what is going on, that can push the market down, right? It can, guys, and that's what you have to understand. The last drawdown was 77%. The one before that, and both of these I was involved in, was 84%. So if we go on the law of diminishing returns and say we got, let's just say 65, right? That's a 43,000 Bitcoin. So if you're going to be trading here, make sure you have your stop losses. If you're going to be buying assets here, whether it's Bitcoin, Ethereum, whatever it is, will you continue to buy down here? Because it is my opinion that if you will not dollar cost average more, the lower the price goes, it's not the moment to be messing. If you think you can time the bottom, go ahead and do that. Now, I do not think I can time the bottom. And what has given me the most returns and the most emotional stability is simply dollar cost averaging when everyone is scared. That's generated me completely outsized returns, right? So that's what I'll continue to do. That doesn't mean it's the right thing for you to do. Okay, you need to understand that. So that's what I think is going on right now, guys. And I think it's a very exciting time, right? Because we might have the liquidity that everyone is waiting for. An 88% chance that this week we're going to get a rate cut. And this could be what we're looking for. But guys, I'll keep you up to date with everything that I'm watching in this market, what I'm doing, and what I'm doing with my own money, right? Of course, don't blindly follow me. Use my videos and everyone else's videos as part of your research to make your own informed decisions. I'll catch you in the next video. Peace.